Greeting to all traders. Welcome to this channel. This is the daily review of the Monday of the 10th of June. You are welcome. We'll be going to the chart and check and analyze what the market has delivered this day. It is the Monday. I'm greeting you from Suriname, and this once more is the algorithm that I am in the process of programming by backtesting and journaling, and hoping that at the end I will be able to deploy it to take trade for me in the time to come. Thank you for being here, and we'll go to the chart. This first of all is what I have uploaded this afternoon or AM session. It was a tape reading session. Initially, I had purpose to sit with some other trader, but then real life call, and I did not log into them to their live session. So I came to the chart and did some tape reading and a demo execution, and after that I closed the chart and have not taken any trade from the AM session. For actually what has happened is that I had opened a 2000 US dollar account, demo account, paper trading account, and take 3 trades, and I'm going to be using this account. What the purpose is that I will be taking trades, executing for about 20 trade days, and I'm striving to reach and trying to maintain what you call 80% consistency. And this is the 5-minute chart. I am executing and hunting on the 5-minute chart. On this 5-minute chart, what I do is that I have also the institutional levels that determine the range that the algorithm is referring to each trading day, each trading session. Like for a Monday like today, I focus on the PM session low from Friday, PM session low from Friday, that is this one, and I'm looking at the PM session from high from Friday, and that should be somewhere here. Here is somewhere. This is still the lunch hour somewhere. That is how I annotate the 5-minute chart. Here is where I hunt liquidity. Here is where I take my trades. I'm for high impact news driver for the first 30 minutes. I use this time frame to see the volatility and how the market makers use the huge high impact news that are more prone to be manipulated and to offer strong manipulation of volatility in the marketplace. This is the 5-minute chart up. I had taken 3 trades this day. Let me show you what I have used taking those trades, and then we'll go to the setting, and then if I move this execution, I base on this is the opening range. The opening range is from 9:30 to 10 o'clock, and the opening range, let me close this, they are real execution, okay, and between when the market open, we first in the first in the first 30 minutes, the opening range, what we try to do is define first of all the opening range gap, that is where we close at Friday and where we open at 9:30 Monday. When it is defined, we try to look at gap theory. That is a much more advanced way of trading, for the market is prone to rally to the consequential encouragement of this opening range gap. That is when I have this regular trading hour on the 1 minute chart, and I define from Friday closing price. I show you how it is defined. Friday closing price till the opening, and the opening is right here. We opened here and trade lower, and then you have a gap theory is something that we may take time to study one of these days. It has been explained thoroughly by the mentor himself. Actually, he does not claim to have authorship of gaps, because there have been gaps from the time the market have beginning to be projected, but how he used it and how he applied the gap is unique to ICT, and one can go to him and study gap theory with him, or you just join me, and in time you will be seeing what the gap do at 9:30. From 9:30, when the gap open, when we have this down to the Friday closing price, this cone gap, the market open and trade lower first to take a swing low. That is very important, to take a swing low. It is where I knew that we would be going up, and if I am back testing, this is what I am writing. I'm so glad that I'm able to see the market trading exactly as I wanted it to trade. It has opened and trade first with a gap first to engage a stop run. And what does that say? Is that anytime the market is prone to move higher, it will engage it will run on stop, and in this case it run on a swing low, shallow run, but it did run on swing low with 1 or 2 pip, and trade to make efficient this inefficient, this SIBI. We normal say a SIBI. If you see it, we have trade to make efficient this SIBI. It is the first trade that we could have taken. We are not engaging until after 10 o'clock, but it is gap theory. And in some cases, this you see this high has been taken, relative equal low has been created, 1 2 with this down swing low. Let me mark swing low. That's like liquidity. It's the review. It has been taken here, and we see price rally. It has created violate and create here a what we call an order block. You can drop to a lower time frame like the 1 minute and use a lower time frame order block. Let me show you. And use a lower time frame order block on this side, this relative equal low, and use this order block with a busy to enter right here. It would be a very nice run, and this seems to be a return to base in a market maker sell model. That's not what we are now analyzing. We are just reviewing what could have happened, but we are trading on the 5-minute chart. The 5-minute has shown us yes, this is one trade, which is the run to close this opening range high gap, and when it close it sell, it drop way down past it and beginning to show the lack of, like a trade to the premium, drop to discounts, and with these highs we saw that this was minor run on liquidity, and this is also we have relative equal high and also a high on this side. We know with this also high side buy side objective we're playing. When I saw that, I first engage and take the first trade on this down close candle. When it was going down, I take this trade. I suffer this heat. I had my stop loss right here. When this candle open, I move my stop loss and I have put it right under this daily. I think it is consequential encouragement of one and it. I think I move it to 270 30 more, and it was a right call, because if I have left it, I would have been stopped out. But using this order block, I use this swing low, 1-2 tick below it, and my stop loss was okay. When it moved aggressively, I trimmed my stop loss, and I think my first stop out was here. The reason was that I wanted to capture the whole move to this draw on liquidity, but I was banking as we go, and banking as we go is that I didn't want to see price drop so deep to stop me out 1 or 2 tick below this new week opening gap. Wanting to see price use it as inversion, a trade past it, drop to the consequential encouragement. That is what I was looking and seeing price to expecting price to reach the consequential encouragement. So I have my eye on this consequential encouragement and trimmed my stop loss to 2 tick below this low, and I got stop out, I think, right here. If you're looking at it right here with this candle, I got stop out. A better place to be to put the stop loss would have been this long tail, this long wick. I could have put the stop loss right at the 75%. It would be a tough call. I got first stop out there. I then jump into the trade when I think got stopped out here. Enter again, I think, yes, by 2. Enter a trade here. Got stopped out here because I was really aggressively moving my stop loss when I saw price was expanding to hit my target, my draw on liquidity. I just turned my stop loss to right here, and I got stopped out. I then enter again on 2 occasions to trade, and then have stopped out right here again. I wanted to see price aggressively rally toward this. What I have learned, I recorded all. Let me for my own purpose and own study. I have recorded that experience right here as the opening. This experience has been recorded right here. I said price action did trade to the relative equal high draw on liquidity. We expected trade to and through it, so I got stopped out. This is just demo, valuable lessons learned. Don't haste to trim your stop loss, focus on the delivery. So that is what I experienced this morning. I also had record that experience, and you can actually see on this video how I was moving with my stop loss, and I think I was too quick, too haste to move to cover cost and cover bank as we go. So I record that experience, taking it as a lesson, valuable lesson. Now reviewing it, I'm content that I have seen the draw clearly. I have read the PD arrays. I have understand the gap theory. I take trade in the AM session, AM silver period window, and I enjoy this ride to the buy side liquidity. That was what I did on this Monday. So I can take these off. They were real execution, and actually they give me the first one. I think the first trade gave me 370. That was one. I entered to it, give me 252. I got stopped out, and this one gave me 300, and I finally with $19 $0.81 shy of my day target, which is 1,000 US dollar per day. I missed that, but I was content and happy. So I closed my chart, real life did call, and I have not entered no trade the afternoon, neither was after or behind my chart. That is what the execution. I recorded at the channel. You can check the execution. When the tape readings show you obvious draw and your model speaks to you, I said, do not talk, take the trade, engage, and seize the profit. We'll go very quick through this daily review. Yes, this daily review. I think we can jump right into the 1 week chart. From the weekly perspective, we are looking at the market, that the market has traded first into this busy, which is this one, this busy, deep trade through the busy, has strongly come from the busy. We saw that price trade and did not take this 2 weeks ago. Consequential encouragement, did not trade to it, neither displaced plus it, giving us the idea that price will rally. Price did rally, and we saw that. We have enjoyed it to first take this 3 weeks ago, from here 2 weeks ago high, and did take this high too, and close above this high, indicating that it is going to go higher, will most likely go higher. We conduct the analysis, and we said we are not in the process of choosing top and bottoms. So in this case, we don't choose top. We expect price to first. What we expected is that price would open somewhere near this candle, trade low to a daily order block, a weekly to this order block. Yes, That is what was. This is a swing high. We are on the daily. Expected price to trade is Friday, yes, to trade first lower. We wanted to see price drop much deeper to this order block, and then use this order block to and then rally higher, and depending on what it would have given to us, what it was given to us, we would have used the main threshold of this weekly as indication if it will collapse and go further down. If it closes below this main threshold, we will see, and we are reasoning that price will go down to the sell side objective. For now, we are seeing that price have rally, first open, drop to the consequential encouragement past it, but did not reach the lower 75%, the lower quarter of this tail, and then rally this first, the trade to this, and then rally to this to go further to the buy side. What we can expect, and that is what we'll be doing, we are not choosing top nor bottom. This is an order block. Price an order block. We are expecting price to continue further. How much further is that we are always going to look to this high and that high. So the range of opportunity is from here. You look, price can rally. We will be looking to price to rally to take that high and this high 48 handle from where it is now, and maybe further. So we'll be going with this premise that tomorrow, the projection of tomorrow will be, because of what we have seen today, the price may and will rally from this order block. It will rally to the buy side. We had analyzed and did a high time analysis, thinking and believing that price would have opened and dropped further to the order block, to this order block. It did not paint out yet, or have not paint out as we have analyzed it. What we want to do is then approach the market, seeing where the order flow is taking us, and for now the order flow seem price open, trade down, and is projecting toward the buy side. So we're expecting bullish rally tomorrow. This is the daily chart. It is best to go and check the news when you're on the daily chart. We had this, tomorrow is a trading day. We won't have news before at 9:30, so it may be a very normal trading day. We had no news today, but a nice run. Tomorrow we may have a nimble, very PM session, may be very quiet. I think the AM session will be better for you to engage if you want to take trade tomorrow. I will be reading the tape in the AM session and try to and look if I can find any opportunity to engage in the AM session, at best before lunch hour. For if I look at the number from 9 to tomorrow, the Wednesday, the day after tomorrow, if I look at it, we will have CPI and FOMC day, followed by PPI. It is a very strong Wednesday till Thursday, Monday. I will avoid trading this Wednesday. I will be reading order flow and liquidity, but do not trade on these days, or you may trade, but after this event you can go and trade, and be careful how they set up for the second event. I think it will take very advanced student or experienced trader to trade after non-farm payroll CPI, for we do not engage before it. And PPI will also be a PPI number will also be a very nice volatile news driver. You can wait until after it, then you go and start engaging trading Thursday after 11 o'clock, and Friday also. That is how I check the trading day of the week in relationship with the analysis I am seeing. So what we can see is we can continue seeing the market going higher tomorrow, as the prediction, as the anticipation is laid before you, that we will most likely see it going higher to engage these liquidity. And then with Wednesday CPI and also FOMC, we can see price drop very aggressively to the sell side, maybe manually intervene to the sell side, and give us a down close week as we had predicted from the analysis. Whatever the market give us, we will be here tape reading it first. Tape reading is where we do not attach no monetary profit and loss, no monetary link to what we are doing. We're just reading how the market project price, seeing how our decisions, our model comes to fruition, trades and imaginary, and then we take profits like we would be in a trade. The only thing is that we don't take trade, we don't take those trade. It is just tape reading, and tape reading is what we do, what we want to be best at before we engage the market with real finance. The 4H, I think I can go there to clear something. Initially, that is what our analysis have. So this is the 4H. We have here a relative equal high. Once more, the market trade to these relative equal highs, and we are now looking at. Let me take this 15 minutes. We are now looking at a long tail, which which always we grade for the algorithm is looking at this tail. It is looking at this tail as a gap. The 4H, let me take this 60 minutes CB away, and then we want to look at how our price will trade to and will engage this level as it's deliver. What we are seeing is that price once more had trade to this relative equal high, have taken a high that is Monday high, and we can see price first drop to the equilibrium equilibrium of this consequential encouragement to engage first this low somewhere here, and then rally to take this objective, engineering deceiving them that it will go higher, and then that with CPI and FOMC we can see a collapse. That is what we are expecting to happen. We see some respect at this. The body is respecting this consequential encouragement of the Friday. Price may drop from here, for it has thoroughly engaged the buy side. So price may drop from here and continue go lower, but for now I am looking at the market to step at this bearish order block. Maybe it's consequential encouragement, which is going to be somewhere here. Trade higher, use the news event of Wednesday to collapse the market or drop the market to the sell side objectives. Whatever the market will give us, we will be here reading the tape, understanding the order flow, and will engage whenever our model parameter call. That's why we are hunting those parameters, and we will be looking at it. For now, that the market have opened on this 4H trade but did not close below this consequential encouragement of this tail. We are looking for the market to, for now, expand higher to this objective, this buy side. First the consequential of this one, and on the 60H I'm looking at these two lines. They are swing high for it to engage. The range of opportunity from here to there is about 45 handles, and here 64 handles. So we might see some nice move, and you can capture your 20 handles or your 5 handle. What I can expect is that this candle can trade from here to here and then go higher. So your range of opportunity, if you capture the displacement from here, if you capture the setup from all the way this consequential encouragement or lower in a turtle soup, you can have a greater range of opportunity. This is the 4H. I'm dropping right to the 60 minute. No, let me correct something before we leave the 4H. 4H time frame. We have looked to these two candles, and we have marked them as balanced price range. Balanced price range. From here to there, this equilibrium there, we have expected price to stay below this, respecting the equilibrium of this range. There the range move higher to a move lower. The middle point of this balanced price range, that price respected that on closing basis. So I wanted to see price first rally to that equilibrium and then drop to the sell side. For now, this day trading give us that price have trade past it, have bounced on this 4H, have already bounced on it on the equilibrium. I'm expecting on closing basis for this candle to project to this this consequential encouragement. If it will go higher, if the market will go higher, then to close above this equilibrium, respecting this balanced price range, then I will be seeing long prices to the upside, to the buy side liquidity that are above marketplace. For now, as I'm expecting price to drop and then trade higher to collapse with news further in the week. Yes, I want to go on the 60 minute. On the 60 minute, what are we looking at? Indeed, we are seeing some inefficient, some swing high. This is a swing high, price can reach there. We have seen now another swing high that has been created right here. So price, there are some there is buy side liquidity above this spring high. Now price of crate also here is swing low. We can go on to mark the swing low. Below every swing low there is liquidity, and the 60-minute is giving us our framework. We forming the narrative from the 60-minute. We say it low, sell side liquidity. We check the narrative, like for instance now I'm looking at price to first drop, engage this swing low first before every run, expect a stop run on the opposite side. So I want to see price drop and engage this relative equal low with a swing low, to engage it to this consequential encouragement of the 4H tail, and then rally toward this swing high first. I think this is on a lower time frame, and it must be the 5-minute hunting time frame. Let me clear it from the 60-minute, and then when we reach here, then we can put it on. I think that this is where price most likely can go. The 60-minute is showing us that we have here on the here a BC, a SEBI on down close candle, sell side imbalance, buy side inefficiency, and the price is now trading in that range, in that sell side, respecting it, staying. It is wicking past through it, but it is staying below the high, below the inefficiency. It is telling us a story. We normally say the body does the damage, trade 2, and the body, the wicks and the tail does the damage, and the body tells the story. The story now we are reading here is that price is trading in and has been working the upper side of this SEBI. Price most likely may trade toward this 4H consequential encouragement of a tail, a 4H tail, in this 60-minute. You can pay attention to this consequential encouragement, this long tail, and see how far price can trade. Rally again, and then engage this swing high, and then continue. From what we are looking at, price may, because it have fully rebalanced this BC, it has fully rebalanced, back and forth rebalanced this BC. Price may have displace to this downside. Take this swing as a model 22 market structure shift below the swing low, create this displacement, a swing, a SEBI, trade into that SEBI, and then start looking for sell side objectives. Because of what I'm looking at, the respect that we are seeing that price is giving this BC, I am more prone to hunt with this model 22 in mind as my first approach, first schematics, what I want to see happen. But if I see price trade with one long wick to do some turtle soup, I won't mind to take the trade from the long trade going up. It is going to be a day. The PM session might be a choppy PM session because of the big money pulling their funds, and and for the margins being manipulated by the brokers. Because of all that, we might see a very quiet day tomorrow, or a choppy PM session. So expect that there is some inefficiency right there, a 60-minute inefficiency to where price may trade to. This has been made balance, offered sell side delivery on this side, and it is still a small portion that need to be covered, and that is that portion. That portion is need to be covered. We will leave it here because of this tail. We are going to watch how price engage and trade to and through this tail. If we leave this SIBI and trade to the low end of it, we can also use it like here is the SIBI created. It's offer, trade past it, it can be used like a resistance to trade lower and engage sell side liquidities. Now we have both side analyzed. We are holding to the weekly and the daily analysis, and might see a bullish run tomorrow. So if there is an opportunity shown at the correct time, we see that after the London trade tonight, after the morning or more pre-market before 8:30, we want to see how London trade and engage the market. If we read London well, we can have a trade, nimble trade to this side, or we may have this drop first here to give traders that we are going this side, and then continue and then trade later to the buy side. If we see strong displacement to take this swing low, trade pass and close the consequential encouragement of this long tail, and we will be looking for model 2022 in sell option. Both sides I have analyzed and clear. The mentor always like to say, when your trade must be one-sided. In this case, there is room to argue both sides. The best for beginners and the best for less experienced trader is just to sit and see and wait till it become one-sided, low risk. I will be trading it because of the experience I have, but I have two approach of the market. If I see certain thing, I will go for the nimble long. If I see certain thing, I will go for even a nimble short, trading just one contract, and try to get my 10 to 20 handle move. Both sides have the potential to give us those move. So I think we are ready on the 15-minute. Get some more details on what the market is trying to do, have been doing. As this is 15 minutes, we see we are now looking at a very influential busy price have trade to through it, and then through it can be used to trade lower for now, because it will be used as an inversion, can be used as an inversion fair value gap. Write it, amen. Inversion fair, an old fair value gap in this basically that will have influence in price delivery. And we are now actually at the SIBI, the 60-minute SIBI, consequential encouragement. We have worked the buy side. There is some high here to engage. Here we have a bearish 50-minute bearish order block, and 50-minute bearish order block. The main threshold of this order block from here to there. Let me look if I use the body. Price did close above it with this rally, but we see a swing low, taking this swing low, the 50-minute swing low, down with displacement. A trade into it. If we see there is a SIBI trade into it, 1 time, 2 time, 3 time, trade to it right here. Put this one in shadow. That inversion fair value gap, and then you have this fair value gap. Price of trade and enter. We can expect price to trade below this fair value gap, taking them and then looking for sell side objective. If everything is okay, I want to see first price rally. The first approach is that price rally, use this order block, rally from here to engage, and then drop to the sell side. The second approach is that I want to see price drop with a strong tail turtle soup toward this is consequential encouragement towards this middle point of this balance price range, also maybe into this busy like an institutional order flow entry drill, and then shoot up for these sells, the buy side objective, to use the Wednesday news event to drop to the sell side. In either side, I'm looking for drop to sell side, but the narrative how we will reach that sell side down close week is interesting to be watching and to taper it as we go. This is the swing low is here. There is also a swing low there, a minor swing low on order block, institutional order flow. Here you have the 50-minute. From there to there, you can have some mark of it, and you can leave. This also is draw on liquidity, so if I will put my stop, I will not be having my take profit right here. I will bring it to this high of the current new week opening gap. Price have rally opened, equity opening, drop, take this swing low, trade higher in the rush hour, expense, create market structure shift, taking this one, taking that one. There is some here high that it has not engaged. Price may want to still reach that. If it is buy side delivery tomorrow, we'll be looking at it. If not, the news of Wednesday CPI and FOMC can be used to spike to clear these engineered liquidity and then drop lower. I will be hunting on the 5-minute chart. When the dust settle this PM low, I will have it tomorrow on my chart. When I'm start hunting this PM high, it's in the PM session. You have this one low here, one there, there is one here, one there. I'm looking at something. You might be thinking, what is it? I'm looking at dealing range, the dealing range that has been created. Price initially is going up, this prior it's going up and have dropped, create a low and then high. This low has been taken first, so this liquidity below this low has been taken, so have rallied and engaged the the buy side. This prior, how is this range useful? How is this dealing range useful? Look at what the market was doing prior to this dealing range, and what did it take first? It takes sell side first and then buy side. This retracement, what we can see, we can expect some further retracement into what we can call discount market. For now, that is why it is such a difficult time to get one-sided, for it is now somewhere in premium. It can drop to discount, some deep discount, and then rally to take these highs that are about marketplace. That is what we will be expecting when we will be watching price from the 5-minute. If price drop and aggressively beginning to take these lows, critical lows, to be taken out with displacement, I will be looking to trade silver bullet. There is some mitigation blood that can be traded here depending on how we will see the drop. But first we will be looking at tomorrow. And see what the London session will do. London session open, London session. I have to put the open. London session begin at 2 o'clock. We have then a London session silver bullet. Want to see how they will, if they will give, the market will give that silver bullet. And then you have this London session will close at 5 o'clock. When the London session close, we will come into the market for, we use this the New York open from the New York session from 7 o'clock. New York session, we look back and try to see what the market makers have done the weekend, and prior to 8:30 news embargo, we will look to see what the market want to do, and based on the analysis that we have this morning, we'll wait for the equity to open 1/2 hour after the equity. We'll have our AM session silver bullet time, and then we will be trading until 12:30, going into the lunch hour, which is here, and then 1:30 the hours stops practically 1 o'clock. The algorithm starts seeking liquidity for the PM session at 1:30. We'll have then on 1400 the PM silver bullet, the 1500 final trading hour, and tomorrow we'll close the shop again at 1600. This is how we have analyzed and have reached, going from the review, take us from the 5-minute to the weekly chart. The analysis, we drop from the weekly chart down to the 5-minute, our hunting time frame, and then is for us time for us to close this. We have to cover the calendar. We have I refer and send you to go to the channel to see what work we have there for you to see, what we have done today. We covered it in the review, and I want to greet you from Suriname. First, if you will use any information on this channel or video to trade, be sure that you consult with your financial advisor before you take any trade. I'm greeting you from Suriname, and I am the consistent, profitable, informed, independent thinking trader. I am programming my own algorithm, that is this guy, with backtesting, journaling, tape reading experiences, so that in the future I can use it to do some trading for me. Thank you for having been part of this. See you tomorrow. Good trading day.